The last presentation now comes from Malte. He just recently joined the Stellar Development Foundation as the director of Tokenization RWA. Malte, I think some people might know him because he's also been like super active in the crypto and Web3 ecosystem of Europe in the last years. He has a rich background in consultancy and innovation in crypto. I think for over 6 years he's been engaging with this topic, and now he's leading the efforts on the Stellar front in tokenization when it comes to institutional adoption in Europe. So Malte, thank you very much for joining this call. Looking forward to what you're presenting today.
Great. So yeah, as you already introduced me, I'm Malte. I'm part of the RWA and tokenization vertical at the Stellar Development Foundation. At Stellar, my focus is not only on tokenization itself, but also on what happens after. So we also support our ecosystem partners in how digital assets actually reach investors, integrate into existing financial channels, and create new markets. We have already billions of dollars in tokenized assets on chain, bonds, funds, deposits, whatever. Just yesterday evening, I was scrolling through my most favorite website at the moment, rwa.xyz. Sorry, after block stories, of course. And if I remember correctly, we're now at around 34 billion in tokenized RWAs across all networks. So for me, the question is no longer if, but how can we scale this? And this is what I see every week when I meet with our ecosystem partners. The challenge isn't the technology anymore, it's more about the distribution. And that's why the session is called Tokenization as a Distribution Play. Let me give you a quick, can you see my next screen? Next slide, because I'm not seeing it.
No, we still see the first slide.
Okay, it's like now, right?
Yes.
So let me give you a quick sense of who we are. The Stellar Network is an open source layer 1 built for specifically financial services. So the use cases we're supporting are payments, regulated asset issuance, and DeFi. And the Stellar Development Foundation is the nonprofit behind it, where we provide funding, technical support, infrastructure tools to help partners build on Stellar. We've over 600 million in tokenized RWAs on chain at the moment, and about almost 5 billion in payments related to those RWAs. And this all at very low transaction costs. And most of this aren't experiments. This is really regulated issuances, regulated settlements that are happening every day by partners such as Franklin Templeton, which was mentioned before, but also MoneyGram, the UN, or even PayPal. Why do institutions build on Stellar? Since 2014, our network has processed over 19 billion in operations and has an almost 100% uptime. I would say that's more than a decade of institutional reliability. And when it comes to efficiency, we provide 5-second settlement finality at fractions of a cent. With regard to trust and compliance, we have issuer controls such as freeze, clawback, and also KYC, AML features as programmatic features within our assets. We have some integration and tooling where we deliver APIs that connects with digital assets from TradFi systems. So we're really speaking about an infrastructure here, which is engineered to work with banks, regulated institutions, fintechs, or even governments in a regulated environment and not just crypto native users. And this is also why new players choose to building on Stellar. And when people ask me, and I'm getting this asked often, I can confess, is Stellar institution ready? My answer always is, it already is. And now I would like to take a look how this plays out in practice with you together. And we will start with one of my most favorite examples, because this is exactly what distribution and market creation looks like. This case is about the first institutional tokenized LP structure on Stellar, which is built in collaboration with BCP partners, Cashlink, and us. BCP partners is coordinating the LP structure for this. Cashlink is providing the token infrastructure and the security registry, and we're providing the blockchain infrastructure. And then Triton Capital, which is formerly Kraken Ventures, is launching a around 100 million fund fractionalized through tokenization. The idea here is to provide access to venture capital returns in a format that traditional finance already understands. This really unlocks venture capital as an underlying asset class for institutions. But because before this is happening, family offices couldn't touch VC allocations, and now really through a regulated ISIN-based security under the German EWPG or Electronic Security Act, they can. And it's integrated into Germany's largest wealth bank. So this product is able to reach around 5K family offices and wealth managers through already existing systems. What is also quite interesting, I think, is that the minimum ticket size dropped from around 2 million to 200K, which is in the end opening VC exposure to an entirely new investor segment. For this case, I'm very happy that Raphael Schulz, which is the managing partner of BCP Partners, is here with us today. And we can do something different here and shoot a couple of quick questions at Raphael, I would say. Raphael, you here?
Yes, thank you very much, Malte. Hello to everyone. Pleasure to be here.
So, Raphael, tell the audience why tokenize venture capital just now?
Yeah, there are often market momentums. We see that the traditional venture market had like a massive correction. A lot of valuations went down, and that was a good step. So we see after that market reset, the weak VC funds are gone, the strong ones are still raising, and there we see a good opportunity. On the other hand, this caused by Web2 funds, we are focusing on Web3 funds, and Web3 funds have been, even in that time, always outperforming. A Web3 fund, fun fact, is normally running between 4 to 6 years and giving yield in the beginning because of tokenization, early stage tokenization, while a traditional VC fund runs 7 to 10 years and is waiting for an IPO. And also, you need to see that Web3 VCs from Binance, from Kraken, from all of these large exchanges, this is a large growing ecosystem which is so far untouched, and we are going to touch it.
Cool. And how safe is the structure for traditional investors or even banks?
Yeah, the beauty in it, we call it a Web 2.5 setup, is that you invest very traditionally with an ISIN. So you just need your bank account, your broker account. You don't need any stable coin, any wallet, any complex setups. You just go with the same method as you have been doing it for the last 25 years. And I think this is important because we forget about the distribution and how people are building trust for an investment. On the other hand, you have the BaFin regulated stack. Cashlink was taking part of that here and was setting up a beautiful product and sub-tokenizing the broker accounts in that bank. And then you have on the institutional side of Stellar as our preferred chain, which has already the API connections to the whole banking ecosystem and the understanding of digital assets. So all of that together was bringing us to wrapping existing bank accounts with the Stellar blockchain and then make them just more accessible, easier to distribute, and more transparent.
Perfect. And by the way, Raphael will also join me later in the breakout room if you have any more questions on specifically this product, which is part of our ecosystem. Thank you.
Yeah, thank you.
And then I brought another example from a tier 1 global institution, Franklin Templeton. I think it was mentioned before on the quiz already. They built their Benji platform on Stellar to tokenize their Franklin on-chain US government money fund. It was the first US registered mutual fund, which was really processing transactions and recording ownership directly on a public blockchain. As you can see on the left down there, this is live via the Benji Investments apps. And this fund now holds around 840 million AUM. A very crazy fact from my perspective is that by moving operations on-chain, Franklin was able to cut costs from $50K to $120 for the same 50K transactions, which is a 400x efficiency gain. And every time I share this number with banks, you can see their eyes lightening up. What is also quite powerful, I think, is that we have daily yield payouts, we have real-time buy and sell transfers, and also the possibility for on-chain collateralization. Franklin, by the way, also expanded this into 8 European markets through GBenji earlier this year. This visual basically shows how this system actually works. So on the left, you have what I already mentioned, regulated fund structure. And next in the center, the transfer agent and broker dealer layer, which is fully licensed under US securities law and which connects Stellar or blockchain as the system of record. So each share of the fund is represented by one Benji token issued on Stellar. Investors can subscribe, redeem, transfer those tokens through the digital app or their qualified custodian, with in the backend, the transfer agent automatically updating the on-chain register in real time. So what you're really seeing here is full interoperability between traditional fund operations and blockchain infrastructure. No change in the investor experience, but massive improvements in terms of settlement, transparency, and costs. What we're learning from these institutions at the moment at Stellar is pretty clear. One thing is efficiency. Efficiency is measurable. So tokenization can really remove operational pain. Take Franklin Templeton as an example. Access is expandable. Take BCP Partners example, regulated rails, which can unlock new investors and new markets, and adoption. So the institutions we're speaking to no longer ask if, but how they can make use of blockchain technology and how this fits into their existing business. And this is basically what we mean by tokenization as a distribution play, connecting regulated assets on-chain to global financial markets. And to support all this momentum, we're scaling here. On the right, you can see a few of our upgrades. We want to increase our network throughput to 5K transactions per second, decrease our ledger close time down to 2.5 seconds, and many more things are going on at the moment. These upgrades are rolling out now to keep Stellar at the most trusted institutional blockchain for regulated finance. Where does this leave us? I think tokenization has matured, and it's not longer about pilots, but really, as you have seen from the examples, production and integration into traditional rails. It's driven by tier one institutions like Franklin Templeton. And this is also where we come in. We offer development support, we offer marketing and adoption support, and also financing. So really targeted grants for high relevant institutional projects. So if you're a bank, an asset manager, a fintech exploring, let's build together. And in the end, this is what we mean by tokenization as a distribution play. We really want to build an ecosystem which is turning technology into access and then access into new markets. Thank you, and looking forward to receiving your questions or seeing many of you in the breakout.
Thank you very much, Malte and Raphael. We have 2 questions so far. I was asking Simon for a follow-up to his question, so that would be great if you could specify what you mean. So starting with Angel, and I think this goes to Raphael. What is your expectation about the breakdown of institutional versus DeFi distribution for that VC's $100 million?
So we see in the distribution just a completely new channel. In that case, we designed that setup on the request of the financial institution, because as we said, venture capital is normally a very private access thing built on trust, on meetups, on personal relations. And so the idea was born that we can distribute it and bring it as a new underlying asset class to a large group of very traditional investors. So for us, this is a pure institutional game, because also a fund, also a venture capital fund, is always an institutional investors. It's not a retail product. It can be only traded between institution and professional investors. That's why we choose this setup.
All right. Yeah, maybe you know what this question is about, but Simon asked, isn't that kind of integration of TradFi needed to go DeFi? I think it might go back to what you said, Malte, about being like institutional grade, and that you really need to have all of these mechanisms in place in order to let TradFi participate in DeFi. That's how I understand it, but maybe you could also go more into the question what you observe when talking to these institutions, how appealing it is for them to really enter the DeFi markets.
I mean, yeah, I don't know if I understand it 100%, but what we're seeing now is that true DeFi adoption on Stellar highly depends on having regulated, trusted on-ramps from traditional finance, where still the money is kind of. And I think this can't be scaled if the underlying assets, liquidity, payments don't connect to the systems where institutions still operate. So rather than like, from my perspective, DeFi replacing TradFi, it's more about bridging those two, bringing transparency, programmability of a blockchain into a framework that meets institutional standards. So having considered compliance, risk, governance, and this is where we would like to fit in.